again, we've been saying this forever. These people are using the suppression of the Western market against us. They short the price on COMEX. They then purchase the physical at a subsidized price and stand for delivery in Hong Kong and then move it to the Shanghai Gold Exchange. Over 200% in the past few months. Interesting. And it's all exchanged for physical. Interesting. And it just happens to end up at Brinks Hong Kong, which is a COMEX approved vault. And then it just happens to find its way to the Shanghai Gold Exchange. And the deliveries are off the charts. See the bigger picture? If not, you're going to get rolled over by this when it all breaks. I hope people do.
Robust gold buying has propelled the premium for gold, traded on the Shanghai Gold Exchange, to unprecedented heights. Chinese buyers have consistently paid an average premium of $40 above the London Bullion Market Association benchmark in the first 4 months of this year. What's particularly noteworthy is the change in behavior among Chinese investors. Historically, they've sold gold at rising prices. Still, over the last several months, despite the rising gold price and the substantial premium, they have continued to pile into gold, particularly physical bullion in the form of bars and coins. According to Andy Schectman, the Shanghai Gold Exchange has emerged as a key player in the global gold trade, surpassing the New York COMEX in combined average daily volume. This rapid growth highlights the changing dynamics of the gold market, with Shanghai now ranking as the world's second-largest gold trading hub after the London Bullion Market Association. These developments carry profound implications, signaling China's strategic endeavor to dominate the gold market and marking a systematic erosion of Western dominance. Despite record-high prices, recent data from the China Gold Association indicates that China maintains its position as the leading consumer of global gold production. The China Gold Association, CGA, reported that the country's gold consumption in the first quarter of 2024 was 5.94% higher than during the same period in 2023, driven by increased demand for safe haven assets among citizens. Chinese buyers acquired 308.91 metric tons of gold in the first 3 months of the year, with gold bars and coins accounting for 34% of the total. Additionally, data from the Hong Kong Census and Statistics Department showed that China's net gold imports via Hong Kong surged by 40% in March compared to the previous month. With such substantial import figures, Andy suggests that the era of Western dominance in the gold market may be approaching its end. We will present clips from Andy Schectman's interview with Liberty and Finance. But before we do, if you want more videos like this, please hit the subscribe button and turn on the notification bell for more updates. Thank you, and enjoy the video.
So the other day, right, we saw 7,560 gold kilobars that were shipped out of the COMEX, okay? That's $571 million worth of gold, 243,054 ounces. Who's got that kind of bread, right? So it was all shipped through to Hong Kong Brinks. The exchange for physical is a way where you can buy a contract on COMEX and exchange it for physical, typically in London. But if it's done in the OTC market, the over-the-counter, the two participants can negotiate and say, I'll take it here. And they can even negotiate, I believe, in the form of the gold. You want gold eagles? Fine, we'll deliver it there. But anyways, the OTC is, in respect to Brinks in Hong Kong, almost all of the, and this is a COMEX approved vault, right? Almost all of these transactions that go to Hong Kong Brinks are OTC, right? Almost. So what happens is that you had 243,000 ounces get delivered in the OTC market in exchange for physical to Brinks Hong Kong. And what happens then is that once the gold arrives in Hong Kong, the trade is unwound in COMEX, and the bars are then transported by armored truck to the Shanghai Gold Exchange. So again, we've been saying this forever. These people are using the suppression of the Western market against us. They short the price on COMEX. They then purchase the physical at a subsidized price and stand for delivery in Hong Kong and then move it to the Shanghai Gold Exchange. And look at the deliveries off the Shanghai Gold Exchange. They're off the charts. So they're bleeding dry the LBMA and the COMEX, having it moved by exchange for physical to Hong Kong and then driven over by armored car to the Shanghai Gold Exchange where they take delivery. I mean, you can't make it up. And between the Shanghai Gold Exchange, where those purchases are like cash and carry, and the Shanghai Futures Exchange, the combined average daily volume over the past 2 months has increased more than 200%, and it now exceeds the average trading volume of the New York COMEX market. Effectively, that now makes Shanghai the world's second largest gold trading market after the London Bullion Market Association. Little by little by little by little. Do you not see it, you guys? Over 200% in the past few months. Interesting. And it's all exchanged for physical. Interesting. And it just happens to end up at Brinks Hong Kong, which is a COMEX-approved vault. And then it just happens to find its way to the Shanghai Gold Exchange, and the deliveries are off the charts. See the bigger picture? If not, you're going to get rolled over by this when it all breaks. I hope people do. And if you look, China's net gold imports via Hong Kong in March rose about 40% from the previous month. They continue to slowly increase, and the media does nothing.
Recently, the U.S. Congress passed the Repo Act, granting President Joe Biden's administration the authority to seize Russian assets held in American banks and transfer them to Ukraine. This move comes in response to the full-scale invasion of Ukraine, which has led Western countries and Kyiv's allies to freeze approximately $300 billion of Russian assets, with about $5 billion located in the US. Dmitry Medvedev, in a statement on his Telegram channel, expressed Russia's inability to respond symmetrically due to the lack of significant US government property. Meanwhile, the US is restricting China from providing financial support to Russia and threatening sanctions against banks and companies. However, it has allocated $200 million to Ukraine without congressional oversight. This plan also involves confiscating Russian assets and redirecting them to a country currently in conflict with Russia, escalating tensions further. These actions raise questions about their rationale. Whether they are perceived as foolish or part of a larger geopolitical strategy aimed at a reset remains uncertain. Nonetheless, Andy cautions that the implications are troubling, particularly regarding the abuse of reserve currency status to coerce and intimidate other nations. Let's get back to the interview.
The summary, or the Repo Act 4175, basically to seize the Russian assets. And of their Forex reserves, 5 billion of them are here in the United States for sure. And well, they want to seize those assets and give them to the Ukraine. I mean, you can't make it up. And this is probably why you just saw a Russian court that ordered seizure of $440 million held by, in JP Morgan assets. And it's tit for tat. But you can't make it up. I mean, we go around telling China, you're not allowed to give any money to Russia, your ally in the BRICS. If you do, we will sanction your banks, your companies, and even Beijing. But we can not only give the Ukraine $200 million with no congressional oversight, we can actually seize the assets, the Russian Forex reserves, and they're begging their allies in the G7 to do the same thing. They have to have kind of a unanimous decision to allow this, including the funds in the European Union. But they want to take all this money and give it to the Ukraine so we can take your assets because we don't align with you, even though most of the countries think we're hypocritical, and then give it to the country you're fighting on top of already giving them, $200 billion in aid and providing logistics and support and weapons. And it's just, you have to wonder what's going on. Dunnigan, I don't understand how this could even be thought acceptable. And I don't care how you feel about Russia. I mean, when you cross the line as the reserve currency, it was bad enough to sanction and weaponize. It's a whole nother thing to confiscate and then give the assets to a foe that you're in the middle of a war with. I mean, they'll write about this in history books as the epitome of stupidity. Or maybe it will be discovered this is what they were doing to try and elicit a reset. I don't know which one it is, but I mean, you have to ask yourself, okay, is there a middle ground here? Either it's ridiculously stupid or they're trying to do something. And to see the continuation of sanctions, I mean, and people, look, if this administration wins, look, I think Biden or I think Trump should be the president. I think he'll be a whole hell of a lot better. But even he's dumb in talking about sanctioning other countries if they stop using the dollar, like the BRICS. You can't sanction. You have to stop. The country has to stop going around being coercive and being the big bully that everyone is rallying against. This is the rallying cry. And whether it be, I mean, God help us if the current administration wins, we're in big trouble. And if Trump wins, great. I think we have a better chance of slowing things down. But even him saying publicly, we will sanction countries that try and move away from the dollar. No, you can't do that. You can't make someone take your currency or bully them into it. And that's, I wonder what's going on in this country when you see nothing in regards to cooperative relationships, mutually beneficial. Rather, it's just the stick. There is no carrot. It's just the stick. And the carrot would be, we'll give you money, but we have to borrow that money or print it. So, I mean, you can't make it up.
Yeah, in fact, in order to lend it to you, we've got to borrow it from you. Would you please buy our treasury debt?
And if you realize that all military spending is discretional, by 2031, the Congressional Budget Office says all discretionary spending will need to be borrowed, all of it, because all of the income derived from tax receipts will go just to pay mandatory entitlement spending like Medicare Part B, which is 90 plus trillion in the hole, Part D, 20 plus trillion in the hole, and Social Security, 77 on top of the debt. And so that doesn't take into account the people that have come in this country illegally. Who's going to pay for them? Look what's happening in Colorado. Every single government office in Denver has to slash every one to find money to give to these people who are here illegally. And I, again, this country is great because we all come from somewhere else. But, majority of the people here and their heirs or their ancestors or their family before them, rather, they all came the right way and they did it the right way legally. And so I'm not saying that immigration is bad. In fact, that's what makes this country great. And yet we're bankrupting ourselves across the globe and giving money we shouldn't give and are allowing this to happen, this mass migration of people into our big cities that are bankrupting the cities and making businesses fail, commercial real estate topple, the banks that hold the debt, they're on razor's edge, and all the big money who runs it all, they're going to say, I'm out, goodbye. And I mean, you put it together, you see it starting to spin and spin and spin. So anyways, let's keep going.
If China continues challenging Western dominance in the gold market, it could lead to significant shifts in global economic dynamics. As China asserts itself as a key player in gold trading, it may reshape market structures and influence pricing mechanisms. This could undermine Western markets' traditional strongholds, such as the London Bullion Market Association and the New York COMEX. How will China's challenge to Western dominance in the gold market reshape global economic dynamics and geopolitical power structures? Share your thoughts in the comment section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Until next time.